Are we in a buyer's market? Let's find out as we jump into the October 2023 market data for both Texas and Bryan College Station. Enjoy. Report for October. And this is all data from Texas Realtors, their market viewer. So we'll start off Texas as a whole. We've got a median price point of $333,000. That's down just slightly year over year. You can see we've had a little bit of a slight decline there based on the trends. Closed sales are down. Active listings are up, which is resulting in a climb in months of inventory. 3.8 months is dangerously close to 4 months, which is what I really consider that shift to a buyer's market. You can see we're up 1 month year over year. Similarly, if you check out this trend here, ever since early 2022, which by the way is when rates started increasing, we've seen a major increase in the months of inventory, and now we are surpassing what I would consider to be our pre-COVID era months of inventory, and now we're starting to climb even above 2019 and prior. Also worth noting here is this blue line. This is the median price growth, and this is based on a 12-month moving average. So if you average the last 12 months median price growths, I know there's a lot going on there, but it is important to note that that is now in the negatives. So just indicating of a extreme slowing down of the market. And you can see we had the extreme uptick in the Texas market, and ever since early 2022, we saw a pretty significant decrease. Days on market at 52. Again, that's starting to get back to normal levels, and we're seeing that continual increase. We might be getting back to the normal cyclical nature that we saw pre-COVID before things got wonky. The last thing I want to point out on this particular slide is the closed to original list price. So OLP, original list price. What this is showing you is the percentage of the final sale price of the property compared to the original list price. That means that either the seller decreased their price or the buyer came in under asking and and they came to an agreement to sell under asking. So in Texas as a whole, we're about 5% under the original list price. So let's compare that to Brazos County. So here we've got October 2023. This is Bryan College Station MSA. Sorry, I said Brazos County, but this is Bryan College Station, where our median price is $305. We are slightly cheaper than Texas as a whole. And notice we are flat year over year when it comes to our median price. Closed sales are down. Active listings are up. We're used to that. Months of inventory, 3.6. So we have a lower months of inventory compared to Texas as a whole. But as you can see, the same thing we saw previously, we've had that steady increase since 2022, and now our months of inventory are climbing past rates that we've seen. Really, we haven't seen this high, or the last time that we saw this high was as we passed 2018. So we're climbing to some pretty high numbers relative to our last 5-year average. That blue line we saw over in Texas that showed us that the median price growth had turned negative is not in fact yet negative for Bryan College Station. We are seeing pretty steady appreciation, pretty strong price growth. Days on markets are slightly higher. We're at 60 days on market as compared to 52 in Texas. And again, that's ticking back to a normal average. And then lastly, I pointed this out before, but that closed to original list price ratio, we are at 96, which means houses are selling roughly 4% under the original list price. All this means is that buyers have more room to negotiate, particularly here in Bryan College Station. So what's driving all this? Pretty simply, this is our mortgage rates, average 30-year fixed mortgage rates for the last 5 years. And you can notice, look at this. Early 2022 is when those rates started to shoot up. By March or May, we surpassed 5%, and that's when we really saw those months of inventory start to increase. People didn't want to sell houses when they had a 3% mortgage. Now they are looking at a 5%, and buyers are now getting priced out of the market based on the cost of their monthly mortgage. As those rates continue to tick up, we can see correlation between that and the months of inventory, the closed sales going down, active listings going down. The good news is, at least fairly recently, we'll go to the beginning of October here, 2023. So back in mid-October, we saw a max where, according to Mortgage News Daily, we maxed out around 8.03 in terms of our 30-year fixed mortgages. But today we are down back to 7.36. That's a welcome sign. It does look good. The economy is looking to be going in the direction the Fed wants to. So the CPI was slowing down, which means inflation slowing down. That's what the Fed wants. That decreases the chance that the Fed increases their rates. Yes, decreases the chance that the Fed increases their rates, and overall leads to a more stable market. A more stable market means that we can expect the rates to continue to cool off. Don't expect to see anything under 5 anytime soon, but I would not be surprised if in the next 6 months or so we get steadied back into the mid-6s. So that's what we got for our October market report. If you've got any questions or comments, leave it down below. Make sure you like and subscribe, and I'll see you guys next time.